ಯೂಟ್ಯೂಬ್ல or 10:55 தானே. That's what about YouTube?
Ma'am, start பண்ணலாம் ma'am.
பண்ணலாமா?
Yes ma'am.
In the name of Allah, the most gracious and merciful. I am really delighted to welcome Mrs. Agnes Matilda, who started her career as a lecturer in the Department of Commerce at Lyman College of Arts and Science, Tiruchirappalli, as my colleague. In that college, where I started my career as a principal in the millennium year. After her marriage, she settled in California, worked in Rice River Insurance Associates, lived at Pacific Insurance Brokers, did a computer course at Portnoy Computer School, worked in Oracle Financial Services Software, and currently tax associate in California Tax Education Council, a dedicated and disciplined teacher, as well a mother of 3 children. Worked with me for 3 years, and whatever work is assigned to her, she will complete it diligently and perfectly. She had a good rapport with the students. Still, they remembered her when I sent to them the webinar invitation even now. Such a wonderful lady whom we have in our midst today. Welcome, Agnes, and I'm really happy that Mrs. Agnes accepted our invitation for this webinar on the topic tax types and its impact on individual family. I am to place on record my word of thanks to our President, Engineer S.K. Kudam, Engineer Said Ahmed Saib, Secretary Engineer Kudam Mohammed Saib, and Treasurer Jafar Sahib for their constant support and encouragement given to us in all our activities for the betterment of the students, staff, and the college. I place on record my congratulations to all the staff of the Department of Commerce and to my computer science staff, Mrs. Buma and Mrs. Mumtaz Begum, for their technical assistance extended to me in conducting these webinars. Thank you, and I welcome once again everybody.
Thank you. Thank you so much, ma'am. I feel very honored and very pleasure to connect with you after many years. And as Principal Ma'am said, I have been working with her, and she has been a very good mentor for us. And I feel delighted to do this presentation today. As soon as she asked me, I feel like I have jumped back to 15 years, and then I feel like working back with my colleagues and my students. So thank you so much, ma'am, and the management of Annai Hajra Women's College, all the staff, and the head of the Department of Commerce, and all the staffs and students, and anybody is connected in this line through the webinar. I thank you, and let me start this presentation for you. So I chose this topic because everybody would like to do better in life, especially the status and the standard of living is revealed in our financial matters. How much we make, what type of job we go, how much we save, and finally it comes to how much we tax we pay at the end of every year. So I choose this topic to explain more about the types of taxes we have been levied on, and then how it is impacting every individual and the families. I also included how it's affecting the economy as a whole, and with a special focus of Indian taxes and its types. Over to my screen. I'm going to share my screen with you so that you can go through the slides. All right. Tax types and its impact on individuals and families. Um, on the positive note, since we are all stressed about some people, when we start making money and start saving for the family, we all think about taxation. Tax is a stress every year. But I want to start with a positive note. Taxation is a price which civilized communities pay for the opportunity of remaining civilized. So we pay for ourselves to develop ourselves and be protective in a very comfortable manner. That's why we are helping the government to pay by paying the taxes. So this is my with this quote I was so impressed to start with. Now, what is a tax? A tax is a compulsory financial charge on some other type of levy imposed upon a taxpayer, an individual or legal entity by a government organization in order to fund government spending and various public expenditures. Why it's I'm sorry. Why it is necessary to pay tax? Tax earns the major revenue for a country's economy. With that said, it is essential to help the government to give us protection, build better roads and bridges, schools, hospitals, institutions, and to provide all types of social infrastructure structures. And some taxes are collected for general use, while other taxes are used for specific purposes, because it is the life source of a nation, and the life source is used to keep the nation functioning. Now its importance, when you say the why, we already saw the importance, but still we need to underline the importance. It is a mandatory spending. That means certain programs that the government, central and the state government organize, cannot run without this fund. This type of spending accounts for approximately 2/3 of all the revenues the government collects through the taxes. It can be said that economic development of a country depends on various reasons, and one of them is the presence of effective and efficient taxation policy. With that, when the government receives money through the tax, it's called a tax revenue for itself. Tax revenue is the income that is gained by government through taxation. Taxation is the primary source of income for a central and the state government, and it can be extracted from sources. Who are the sources? Individuals, public enterprises, trade, royalties, and natural resources, and other even foreign aids. What does the government do with the tax money? Because a lot of different categories of people or organization are benefiting by the tax. And who are those beneficiaries of tax? Are the healthcare programs, military, creditors of the government, public infrastructures, food stamp programs, veteran organization, and public transportation. Now, I like to go in detail before, even though the topic we are going through is the impact of taxation to the individual, family, and the economy as a whole. Before that, we need to go step by step. What is tax and why do we pay tax? What happens if we don't pay tax? And also how it positively or negatively impacts the economy. Now, who is a taxpayer? A resident, an individual and who is a resident and earns income and fits into the income tax slab. Okay, and I'll be showing the income tax slab. It doesn't mean that everybody, whoever makes income, is necessary to pay tax. They have to fall into the income tax slab and into the age category. um, the residential status and income taxable India. Ordinarily resident, in this resident we can say any resident staying at least 182 days in a year, and who has income in India and outside India. They are called residents, and they are liable to pay tax. Not ordinarily resident, who there are some definitions for them as well. I will include here. um, they are stay in his or her cumulative stay in India during the financial year is 182 days or more, or his accumulative stay in India is 60 days or more during the financial year, and 365 days or more during 4 previous financial year, um, they are called resident. But um, the not ordinarily resident, the NOR, or his or her cumulative stay in India is 730 days or more during the 7 financial years immediately preceding the current financial year, or he or she was a resident in India at least 2 out of 10 previous financial years immediately preceding the current financial year. And who is non-resident? The individual who doesn't fall into these categories, I mean, of course, less than these days they are staying in India, which means like they do not exceed 60 days or more during the financial year. So with this one, and with the non-resident, who has to pay income tax is income that arises in India for them. Um, Even though they doesn't stay on a required number of days inside India, they are liable to pay tax on Indian income that they make. And who are the types of taxpayers? As I mentioned before, resident, non-resident, and not ordinarily resident. And then the companies. For example, companies incorporated India or foreign companies have a place of effective management in India, they are liable to pay tax. And then the firm, limited liability partnership, and others, like even Hindu undivided family business, they are controlled and manage its business affairs, and it is situated wholly or partly in India, are liable to pay tax. Here, if you could see a picture, is I don't think it's like it's not very accurate, but it's like an estimation of how many percentage of Indian households earn less than 2.5 lakhs a year, and which is exempt from tax. For example, 95% of the rural families earn less than 2.5 lakh, and 90% of the urban families earn less than 2.5 lakhs, which is the first they don't fall under the income tax slab. um, this is the estimation like few years ago, but now it's not much change, but it has little bit grown up than previous years. And for example, with the recent information, only around 1.4 crore individual taxpayers are liable to pay income tax in India. Further, around 1 crore individuals disclosed income between 5 to 10 lakh, and only 46 individual taxpayers have disclosed income above rupees 10 lakhs. See, the taxpayers are only 1.46 crores. Of course, this may be not an accurate figure, but it's like an estimation. The total population of India is 130 crores, more than 130 crores, which is like only 1 or 2%, it says, people pay tax. And what happened to the other percentage of the whole community? Maybe it's because they did not pay the tax, or they are not making enough income, or they are not able to go for a job that pays them at a higher level. So these are all the questions are placed in this sentence. We need to think about it, how to improve the number of taxpayers. Even though we say is a system to protect the people and improve the lifestyle of the people, this has to be noted. Like we need to improve, increase more taxpayers by providing them jobs, and educating them and motivating them to make more money. And this is the income tax slab for your information. There are 3 categories. Income tax slab for age below 60 years. For them, up to 2.5 lakh per annum is not taxable. And from 2,50,000 rupees until 5 lakh rupees, 5% of the total income, which is more than 2.5 lakhs, is being taxed. This plus 4% says is a tax or a penalty in case if they don't pay this 5%. For example, a person is making 5 lakhs per annum. First 250 lakhs is not taxable, so we deduct this, and the remaining 250 lakhs is being charged taxed at the rate of 5%, which is 12,500. So similarly, for 5 lakhs to 10 lakh rupees, 20% of the tax is levied, and income of above 10 lakhs, 30% of the total income, that is more than uh, it's charged on more than 5 lakhs. The rest of the 10 lakhs is being charged at 30%. And here is another tax slab for 60 to 80 years old. Up to 3 lakhs for them, no tax, and 3 lakhs to 5 lakhs, 5% of the total income, which is more than 3 lakhs, that is being levied on them. And 5 lakhs to 10 lakhs, 20% of the tax, and income above 10 lakhs, 30% of the total income is levied. For everything, it's there is a random charge of 4% cess in case if they don't pay the tax. And for the for the people above 80 years old, until 5 lakhs is not taxable, and 5 to 10 lakhs 20%. And I have given the calculation, you can go through later. And then about 10 lakhs, 30% of the total income, that is more than 10 lakh. So this each percentage is calculated, and then this amount is taken here plus this 30,000 on this 1 lakh amount. I mean 11 lakh minus 10 lakh. So yeah, can calculate. Okay, just for this is like outline of calculation of the taxable income. So basically, this is your basic salary income minus exemptions, which is equal to gross income, and less the deductions for adjusted gross income, which brings you adjusted gross income minus itemized deduction or standard deduction, which will bring you net taxable income. I like to show you this one. Then only we will know how to plan our tax, and what are the ways we can reduce our tax liability. So here, if you could see in this web page, see, these are the gross income can be calculated by adding the basic salary, dearness allowance, house rent allowance, special allowances, and leave travel allowances. And then these are all the deductions. I will show you at the end of the chapter also. These are all the deductions that you can make to reduce the taxable income. And then this is the net taxable income, and you calculate the tax on the net taxable income. I'll close this one and go back to my screen. Okay. What happens? Okay, we have seen the income tax slab, and how much, what is the percentage it's levied and everything. And what happens if you did not pay tax? Usually, if you are a public sector employee, or you're a employee in a regular company, or a government, if you're a government employee, your tax is being calculated with the office itself. And then, but who is not paying the tax? Either they are not in a organized working environment, or they are self-employed, or professions, or businesses. So it's their own responsibility. When you are self-employed or you're a professional, it's your responsibility to pay tax. What happens in case at that situation if you didn't pay tax? You'll receive the tax notices, penalties or fine, cess tax, that means tax on tax, and then extra burden on the future income. When you are not paying on time, and you are charged with the cess tax, and it's going to be extra burden on your next year income, or next month, whatever it is. It's an additional burden for us. Now we say what happens then. One of the thing happens is the penalty. What are the types of penalties? There are main penalties are on for the first three, like non-payment of tax, non-failure to file the tax, and underpayment of the tax. So these are the main, and other than this, there are other penalties also. As I said, penalty for not filing income tax return, penalty for underfiling income tax return, non-payment penalty, failure to comply with the income tax notice. If you ignore the tax notice, of course, you're going to be questioned. Penalty for not getting accounts audited, and failure to pay the dividend distribution tax, and failure to retain information and the documents, and failure to furnish the accurate information. Ways to avoid penalties. What are the ways we can avoid the tax penalties? Better pay the tax before the due date, and proper tax planning. If you have property, if you have sold property or investments, and if you have business making profits, better do the tax planning. And if you do the advanced payment of tax, that is called estimated tax. So what income category you fall and what is the percentage you're going to be charged, you have to calculate again ahead, and then you make the payment before the due date. That's called estimated tax. And also seek advisor from the tax preparer or the chartered accountant. And what are the benefits of filing income tax return? For example, if you're planning to apply for a vehicle loan, or like a two-wheeler or four-wheeler, or you're going to build a house, you want a house loan, etc., then it is recommended to file your return as the loan company may request it. Consider filing your spouse's return also if you want to apply for a loan as a co-borrower. And the second one is the claim. You can claim tax refund if you have paid advanced tax before the due date. I mean, sometimes the companies, some of the companies, they ready to withheld extra tax from your salary, which will be helpful at the end of the year. They calculate the tax you're liable to pay, and then return to you the balance, the extra money, and then that's an extra money coming in for you at the end of the year. And claim adjustment against past losses. To claim an adjustment against various past losses incurred by the individual or a business, it needs to be recovered in the tax return in a financial year. For example, investment loss or capital loss. For example, if you buy a shares for 10,000 rupees and you're selling it for only for 8,000 rupees, these 2,000 rupees can be is a deductible loss. So you can compensate against in your tax return. That will reduce your taxable income liability. And finally, the benefit is, of course, avoid penalty and prosecution. Not filing your income tax on time can lead to a penalty and other inconveniences. You can avoid this by proactively filing your income tax return. Now, our main chapter, I'm moving on to types of taxes and impacts on economy, individual, and family. Um, okay, basically, we are paying direct taxes and indirect taxes. Direct taxes are that the one, as we have discussed before, it's whatever source of income you have: salary, business income, sale of a property, or interest, bank interest, investment interest, everything, whatever income coming in for you, the taxes are levied, and those are called direct taxes paid directly by you. Indirect taxes are sales tax, service tax, customs duty, and octroi and excise duty, value added tax, etc. Now everybody knows these indirect taxes are all levied under one name, goods and services tax. And I just found this one also because it says other taxes. And if you see professional tax, entertainment tax, municipal tax, and various kinds of cess, other than direct and indirect, this is taken under the other taxes category. But anyway, we are paying, we can categorize majority as a direct and indirect taxes only. This is a fun picture I found in a website. It says if you pay directly to this big fish is eating, like a direct tax, and then if you feed a small fish and the small fish is eaten by the big fish, that indirect tax. I just found in web page, so I want to just share it. Okay, let's go one by one. What is a direct taxes? Okay, if money is earned, then tax has to be paid. If it crosses a particular slab of income received, income tax returns have to be filed in different forms for different types of businesses and individuals. There are different ITR forms available for salaried, self-employed, partnerships, and firms and more. Um, and the next one is property tax. Um, if you have properties like buildings, home, owned by a family or individual or a company, and also the objects or vehicles like cranes, cars, buses, for all these you have to pay the property tax. It should be on the real property, which also includes land and improvement on the land, with the government appraising the mandatory value of each such property and assessing the tax in proportion to its value. Property tax is levied on the real estates, which consist of buildings or land attached to the buildings. Property tax is a tax on the property, usually on the real estate, as determined by the assessor. And then next we'll see the capital gain tax. Capital gain can be defined as any profit that is received through the sale of a capital asset. The profit that is received falls under the income category. The profit you make on the sale of a property attracts capital gain tax. Therefore, tax need to be paid on the income that is received. The capital gain tax is implied on sizable earning from sale of a property or investments. And of course, we all know there are two types of capital gain: short term and long term. And interest earned on this investment is also taxed, for your information. And now, what is this income? What is this interest tax? So we have savings deposit, interest income, and fixed deposit interest income, and recurring deposit interest income. Whatever account you put in, you're receiving interest, and that is your income. It is considered as for example, the interest on recurring deposit is taxable fully as per your slab. It's considered as income from other sources. However, for senior citizens, the interest income from um, recurring deposit and the fixed deposits up to 50% per annum is exempt. Now, gift tax. Gift tax is also taxable only if it is exceeding 50,000 rupees per annum. And also, if you are receiving through a blood relation, parents or spouse, or on the occasion of marriage or by inheritance, then this value is if you are receiving it by inheritance, any gift, it's completely exempt from tax. The gift value is added to your income under the head income from other sources and is taxable. Uh, so re-gifted items are not taxable. It's completely tax-free. Securities transaction tax. It is a direct tax levied by the central government. And when you trade in the stock market or securities, you gain some substantial amount of money, which becomes a source of income, and it is levied with the with the securities transaction tax. And the same is added on the share price, and when you sell or buy the shares, you will pay this tax every time. Actually, this tax is levied on the securities on the transaction during the sale or purchase only through a recognized stock exchange. Perquisite tax or fringe benefit tax. Previously, it was called fringe benefit tax. Currently, it's called perquisite tax because they abolished during the year 2009. So what is perquisite? It's defined as any benefit attached to an office or your position or job in addition to your salary or wages. And just for your information, I have added what are the value of perquisites. The valuation of residential accommodation provided by the employer, value of furnished accommodation, and value of hotel accommodation provided by the employer, perquisite of motor car provided by the employer, and perquisite arising out of supply of gas, electricity, energy, or water, electric energy or water. So these are just a samples of what are the valuation of perquisites. But whatever provided by the employer like a benefit other than your salary or income, it's called perquisites and it is taxable. Now, corporate tax. Actually, the corporate taxes are the major revenue source for government. Nowadays, we have a lot of multinational companies. A lot of companies are investing in India. And then, as I said, whether they are non-resident or not ordinarily resident, when they have a business in India and they run the business and they make income from India, they are going to pay tax. It is collected by the government as a major source of income. Taxes are based on operating earnings after expenses have been deducted. Corporate tax in India is levied on both domestic as well as the foreign companies. Like all individuals earning income are supposed to pay a tax on their income. Business houses too are supposed to pay as a tax, pay tax as a portion of their income earned. This can also be called as corporate tax, corporation tax, or company tax. This tax is paid by the firms for the revenues they earn. Okay, so far we have seen the direct taxes, whatever income, whatever source of income, even though it says the income tax, corporate tax, capital gain tax, whatever name it is called, it's all depend on the source of income that you are receiving. And now, what are these indirect taxes? Indirect taxes are not levied to you directly, but when you do the when you purchase or when you do business and you buy the raw materials or you go to theater or you travel, for everything we are charged a separate a tax additionally for the expenses that you make. Those are called indirect taxes. um, Sales tax levied on the sale of the product and come under both central and state legislation. Service tax imposed on the services rendered. Excise duty imposed on the manufacturing. Customs duty imposed on the import and export of goods. Value added tax imposed on the value added at the time of production of goods. Central sales tax imposed on the interstate transfer of goods. This is just in detail, but we already seen these, so I'm just going to the next one. This goods and services tax, it is called as a GST recently. It is proposed to be a comprehensive indirect tax recently affecting the people which they levy on manufacture, sale, and consumption of goods as well as services at the national level. It will replace all the indirect taxes levied on goods and services by the Indian central and state governments. As we discussed before, these taxes, sales, service, central excise, entertainment tax, octroi duty, customs duty, and purchase tax, everything is combined to one tax called GST. This is just to give you a little bit insight. I have added the GST rates. So 0% for necessary items like books, newspaper, vegetables, bread, salt, milk, wheat flour, and each percent is same way it's levied for different products. So most of the, if you see, the most of the goods fall in the category of 5%, 12%, and 18% on the items or services that we use in our day-to-day life and which is very essential. Most of the services fall into the category of 18%. For example, TV, video cameras, game consoles. Without electronic, we cannot imagine a world anymore. But these electronics are charged at 18% of GST. And 28% to consumer durables, 28% on consumer durables, air conditioning, automobiles, cement, chocolate, accommodation, and lot many other items I have been divided, but I have given you just few examples under each tax percentage. Let's. This is a picture I found this, and this will explain more about what percentage is levied on what type of goods. All right, and then an insight why it is affecting the people so much. Just in one line, it is a multi-stage destination-based tax. Multi-stage, we say multi-stage because it is levied on the each stage of the supply chain, right from the purchase of raw materials to the sale of the finished product to the end consumer, whenever there is a value addition and each transfer of ownership. So finally, the end customer who is purchasing the product is burdened with paying more tax when we are doing any purchases. Okay, types of GST, central goods and services tax, which is collected by the central government directly. And state goods and services tax, it is collected by state government from the earnings when there is business between two states. And integrated goods and services tax, it's collected by the central government from the earnings when when there is business between the two states. Okay, which tax has more impact on individual and family? Now we are getting to the point where we need to learn what we are thinking about the tax and its impact, and direct or indirect. Okay, indirect taxes are not directly imposed on individual, as you see, and it is levied on the expenses incurred by a person. So we cannot avoid some type of products, and so we end up in paying taxes for them. Burden to pay can be easily transferred to other person, from the buyer, from the manufacturer, from the buyer, and from the wholesaler, retailer, until the end customer. The tax is levied on the customer, thereby enabling him or her to pay the reduced amount of taxes. Paying tax also works as a proof that you're not only disciplined in filing your tax returns, but also helps at the time of loan application. Um, this is because at the time of purchase of home loan, the bank requires the proof whether the applicant has filed his or her taxes regularly. So on the economy, it seems to be good on the side of economy, but it's stress. Of course, we are people also. We are also economy, not only the finance, but people also a part of economy, and the life they lead or the spending ability is also decides the type of economy we are having. But it's a stress on the taxpayer to lose certain amount of money every month from their or year from their hard earnings. But most taxes are the very fine resource of the revenue to the central and the state government. Tax money is spent for building the infrastructures, schools, hospitals, government institutions. For some of the essential services are rendered at free of cost. For example, there are free public schools, public colleges, and government hospitals, and lot of non-profit organization which is run by the government that needs a help, that uses the tax money. Um, and the taxpayers such as individual, family, corporate, and other tax sources will try to build their income earning capacity. On the other side, what will happen is, if you don't have enough money to pay, for spending your households after paying the taxes, automatically we are pushed to make more money and improve your financial structure in a stronger way to support the country's financial status. And also it will be a reflection of how the country is being developed. Okay, how does it impact on the individuals and the families? In the incident and impact of direct tax falls on the same person, but in the case of indirect tax, the incident and impact falls on different persons. One thing we have to worry is when the demand is elastic. For example, when there is a demand for a product, the producer must carry most of the burden of the tax, but they risk losing a large size of demand. If they keep on passing the tax on to the customers, finally the customer may end fed up, and they may not buy certain type of products. They think it's unnecessary and they don't want to spend money on it. Through that, they may lose the business or the customers. The effect of indirect taxes on goods and services also depends on the degree of competition between the producers in the market. And for example, purchase of essential items like medical products, everyday needs purchases will be forced to reduce with the low saving for the households. When you say about the individuals and families who are affected by the tax, especially the indirect tax, those who don't fall under the income tax slab, they don't have to pay the direct tax, but instead they are falling at they have forced to pay this indirect tax. If the money flow is reduced by low income people, and average income people may not be able to enjoy the modern mall culture, shopping, theater, and they cannot enjoy the luxuries and the travels. And so it will be a reverse effect on the business, which may lead to low income for the business. Of course, with this the as a what why I can what we can see after the impact is, we can conclude that as a responsible citizen and as a taxpayer, one should understand the tax system is designed for a country's development, and their tax money is a revenue to support the society and the country. And we need to understand the system and use the system with responsibility for to the betterment of individual, family, and the economic life. I have added this one. When we talk about the impact and the struggles or what's happening to the family because of these types of taxes, we need to do the tax planning. We need to give a solution. I believe tax planning is an ultimate solution. We need to be educated as a society, as a taxpayer, and as a citizen. We need to plan. We need to teach our generation, the working community, or the new people who are going to be in future. They are going to be the taxpayers. They need to know what is actually taxes doing to their community and the economy as a whole. So tax planning will be an ultimate solution. So save your money from your monthly income, protect your money, and try to reduce the tax liability, and and budget your salary. Divide the income for each purpose, for households, for any future financial goals or any investments, and for the tax as well. And better if you are um, employee in a government or a very structured company, you can you need to know tax saving deductibles in your salary. Well, what are the deductibles you can make from your salary, so that you're liable to pay income, the taxable income will be reduced. So for example, we are not going to go into the detail. Just for your information, these are all the tax exempted deductibles under section 80 of the Income Tax Act, Indian Income Tax Act. Public provident fund, equity linked savings scheme, which is mutual fund, and you can invest in national pension scheme, and tax savings from fixed deposits, and life insurance policy, and contributions made towards employee provident funds, national savings certificate, and through medical insurance policy premium, home loan, and your education loan. And if you do some donations to charitable organization, these these you can ask your employer or your HR or any tax preparer or a chartered accountant. You can go through this and then ask them how you can make your deductibles from your salary, and also you can ask your employer to know more about it. And now tax planning with budgeting, savings, and knowledge. As I said, knowledge is very important. We need to keep learning out what we are doing. So uh, it's like a goal, or it's showing a right path when you decide to how to budget your income, and if you know how much tax you're going to pay, and what are the expenses you're going to make every month, then you need to know, you need to be familiar with the prices around, and as I said before, the deductibles in your income, what are the ways you can save money, or what are the ways you can invest money and grow your money. So this one, make budget and save money, frame financial goals, and know the tax saving deductibles, learn about the estimated tax for the year. If you're self-employed, pay tax on or before the due date, proper tax planning for the property, investments, and business, advance payment of tax, seek advice from the tax preparer or chartered accountant. And finally, one happy news is tax refunds. If you have paid more tax for the year, if your employer withheld more taxes from your paycheck, then you will get, at the end you will be able to get extra, that extra money you have overpaid will be given back to you. So to be eligible for this income tax refund, you need to ensure that your income tax return has been verified and processed by the department. The income tax refunds would be issued by the tax authorities only after verification and processing of the tax return. Even though you struggled in the for the whole year, and then when you get some refund, it will be like, it will be very happy for you. And with this, I conclude the session. And these are the reference and web links I have gone through. And these are the with these web links, I did a lot of research to make this presentation for you. You can go through this later, and you can learn more about it. And thank you, madam. Thank you, Principal Dr. Rajab Fatima, for giving me this opportunity to do this wonderful presentation after a long time. I feel very happy that these couple of weeks went as if I am working with you and with the staff of Annai Hajra Women's College. And thank you so much, all the staff and students and everybody who is coordinating this event. Thank you, ma'am.
Thank you, Agnes.
Thank you.
Wonderful, wonderful presentation.
Thank you, ma'am.
And nice feedback they have given, saying
Oh,
it is a nice presentation, a nice session, a very informative session. And even a layman can understand about the tax payments.
thank you, ma'am.
And thank you.
Thank you so much. Thanks for all your encouragement.
Thank you very much. Parvati, this is over to you.
Okay, ma'am. Okay. Good afternoon, everybody. Good afternoon, everyone. It gives me a great pleasure in proposing vote of thanks. I offer my sincere thanks to the Almighty, the Creator, the Proposer, for His countless blessings. It's my pleasure to extend my gratitude to the management personalities of our college, Engineer Syed Ahmed, Engineer Kudam Ahmed, Janab Jafar Sadiq, for their solid support and motivation in all our endeavors. It is the time to thank our principal, Madam, Dr. K. Rajab Fatima, who is the root cause of this international webinar. I thank her for her encouragement, her dedication, and motivation, and all the goods provided time to time for the welfare of the department. Thank you, Madam. Acquire knowledge and impart it to the people. The words from Holy Quran. A special word of thanks to the resource person, Mrs. Agnes Matilda, for sharing his valuable information with us. Really, your crystal clear presentation enlightened our knowledge, ma'am. Thank you so much.
You most welcome.
I raise my thanks. Thank you. I raise my thanks To all the faculty members and research scholars from various institutions for their active participation in this webinar. Your positive comments encourage us to move ahead. Thank you, participants. My heartfelt thanks to Mrs. Ratnamaladi and Mrs. Vembu who support us in organizing this webinar. And my thanks to Mrs. Booma, Mrs. Mumtaz Begum for their technical assistance. Thank you, friends. My whole heartfelt thanks to my faculty members of my own department for their cooperation. I once again thank you one and all. Thank you so much.
Welcome.
Thank you, Agnes, once again.
Thank you, ma'am.
Thank you.
Have a great day. Thank
Thank
you,
you.
Parvati. Thank you,
A
Mumtaz.
nice
and
presentation, ma'am.
Thank you so much. Nice presentation, ma'am. Really
Thank you.
got a clear-cut information, ma'am. Ma'am, I
Thank
have
you.
one doubt. Shall I ask you?
Sure. Yeah, sure.
Ma'am, how this pandemic situation affect the tax in Indian scenario?
Yeah, initially, a job, and you have to, spend money on very, very low households only. So I don't think it will affect the tax, but it is affecting the income as a whole. So tax is the next stage. So on the whole community and the whole world is struggling with the low income now. And uh, with the stimulus package, some of the governments are giving the people. Hopefully it will help the people to relax a little bit, but I don't think it's going to 100% solve the problem. But it may add a little bit source for their income during this situation. Yeah, that's all. We don't know the actual tax impact until you do tax for the next year. It will be reflected automatically.
Okay, thank
Maybe
you.
a lot of people may not come under the tax slab. Already only 2 or 3% or less than 3% people are paying tax in India. With this situation, with the loss of many jobs, so many more people won't be able to make such income to pay tax. It's going to affect everything.
Thank you, ma'am.
Maybe we'll hope we will work hard and come up and with positive thinking and everything. With our hard work, we hope everything will be fine. May not be fine in the immediate future, but maybe in a year or two, or in future, we hope everything will be fine.
Thank you, ma'am.
Yes,
Thank
of
you
course.
for
We do pray that everything will be all right soon, so
Yes.
that we can come to the normal stage where
Yes.
everything will be all right.
Yes.
Yeah.
Sure, ma'am.
Okay. Thank you very
Thank you
much.
so much.
Thank you. Thank you. Thank
Okay.
you.
Are we done, ma'am? Can I close this?
Yeah. Yeah. You can close.
Thank you, ma'am. Bye.
Thank you.
Thank you, ma'am. Thank you, ma'am.
Thank you. Thank you, Mumtaz. Thank you.
Thank you, ma'am.
Mumtaz
Bye.
and Booma.
Thank you, ma'am.
Thank you,
Thank you,
Parvati.
ma'am.
Okay, thank you. Thank you.